This week, markets grappled with persistent inflationary pressures, underscored by a CPI index at 330.29, signaling that price stability remains an elusive goal. The labor market, while still robust, showed some signs of cooling, with unemployment ticking up to 4.3%. The Federal Reserve's rate stands at 3.64%, suggesting a continued tight monetary stance as policymakers navigate these crosscurrents. Economic activity, measured by a nominal GDP of 31,856.26, indicates the economy's substantial size, yet growth momentum faces significant headwinds. The dominant narrative this week was the escalating geopolitical landscape, particularly the reverberations of the Iran conflict. The U.S. issued stark warnings to Europe regarding potential delays in arms shipments, a direct consequence of dwindling stockpiles from the ongoing war. Further underscoring the strain, the U.S. announced plans to withdraw 5,000 troops from Germany, a move linked to disagreements over the Iran conflict's handling. This geopolitical instability has profound implications for global supply chains and alliances. Energy markets are at a critical juncture. Reports indicate the oil market is just 1 month away from a crunch point as global reserves dwindle. ExxonMobil CEO echoed this sentiment, expecting higher oil prices as the market has yet to fully absorb the impact of the Iran war, which has already left the U.S. with the sharpest fuel shock in the G7. Despite a temporary dip following an updated peace proposal from Iran, the underlying supply concerns persist. Beyond the geopolitical storm, trade tensions resurfaced. President Trump announced an increase in EU auto tariffs to 25%, a move that has already seen UK exports to the US plunge by 25%, following earlier tariff actions, though Scotch whiskey tariffs were notably scrapped. On the corporate front, Apple's stock gained on strong iPhone and Mac demand, boosting guidance, while Spirit Airlines prepares for a potential shutdown after failing to secure a bailout. Bitcoin also saw a surge in April, but weak buyer demand raises questions about its sustainability. Looking ahead to next week, all eyes will remain firmly fixed on geopolitical developments surrounding the Iran conflict and its immediate impact on energy markets. Investors will closely monitor oil inventories and any statements from major producers. Domestically, further inflation data or labor market indicators will be crucial for gauging the Fed's next moves. The evolving global energy shock, coupled with trade policy shifts, will dictate market sentiment. Subscribe to the channel for weekly market updates. Save this video to check results.